Okay, everybody, it's Monday, it's Tuesday, October 9th. Depending on where you are, it might be Tuesday or Wednesday, October 10th. Before we get started, I just want to highlight what went on last night. After I posted the video, if you remember last night, I was talking about how the pound had already traded down. I wasn't too enamored of trying to trade at that point. But if you will recall, I talked about the market pushing back up into a little dipper pattern, which it did. Now, I will say this. Once the market has started its short-term move down, okay, remember over the last several days I've been talking about some of the more basic elements here. You can see the moving averages on the hourly have turned downward. You can see that the market is continuing to make lower highs. It's making lower lows. So short-term, we can definitely tell that the market is in a downtrend. Mid-term, we could easily say that the market is trading up. As we zoom out, we could say that we're beginning to trade on a midterm in the downward direction. Why? Because we have a high here, and a low here. So in order for the market to turn down on the midterm, what are we going to have to do? We're going to have to go below this low. Okay? And like I've been saying over the last couple of days, liquid markets don't like to just sit there, and they like to seek these levels of price anchors. So if this price over here, mentally speaking, was a low price for traders, if price gets going, you will see traders drawn to this area like a magnet, the same way that if the market starts pushing up, you'll see traders drawn to this area like a magnet. And you can see the market did indeed spike down, recovered fairly quickly during the trading day, and in a sense started to move back up and is now back inside of this larger pennant pattern. If you remember, we were talking about the market forming this pennant yesterday. And if you look at the top, you can see that the market actually pushed right up to the resistance level there. So again, I really don't see any good opportunities either way. We're starting to whipsaw again, and it looks like the market made a very short breakout of the prior consolidation area. In fact, let me go up to 240-minute bar. The prior area where the market was consolidating was initially right in this zone. The market then whipsawed both to the upside here, to the downside here, before finally spending quite a bit of time back inside of the old zone, and then finally broke out here. As we can see, the market is now testing the support level, and as we zoomed out, you can see that the pennant pattern is now morphed back into a larger flag pattern. So you can see this overall run up here and here. We've got the flag pattern starting to develop. I still think at this point that we could use some confirmation, but if I could speak candidly with you, I think that has more to do with I'm a little bit tired right now, so I'm not at my optimal. So let's go ahead and discuss some trades over here for both the long side and the short side. I think, let me zoom in here. I think if the market, if the British pound does manage to clear this small area of consolidation, that there's a good chance that price will make a run back up here towards the 490 area. But you have to remember that this area, this support zone, is going to run all the way up to about 443, 448. So if you're going long at 443, let me draw that in. That would be 2.0443. Your target is going to be 490. Your stop, on the other hand, is going to have to be quite a ways away, actually right near the 400 level. So you're looking at risking 43 pips to make about 43 pips. Not a very good proposition to the upside. Downside is not really that much better, although we do have a slight vacuum area running through here. If price can get going to the downside, we have a little bit of a vacuum area underneath as well. There's this pennant triangle type of pattern that occurred over the 24th through the 26th. So breaking to the downside, I think, is just a little bit different. That would be taking, get on there. I'd be taking short trades at 2.0240 and expecting the market to get, back down here into the 130-100 area, which would place price right here. Because I think unless we can get a reason for the market to really start breaking down, it's just going to get caught. You've got some highs in this area over here. You've got some lows right here. I think those two stacked on top of each other really do pose a problem for the market breaking to the downside. So you'll probably get a retracement off of there. So what does all that mean, and what are the possible trades? Well, I think if the market breaks out to the upside, the prudent move would be to wait for the little dipper. Same on the downside, waiting for the market to break down and then give a little dipper. Just keep this in mind. To the downside, they're supported at about 130, so you're going to have to be careful of how far the market pushes down before it starts moving back up. In other words, as with all trades, make sure you're looking at your risk versus your reward. Keep your eye on that 2-to-1 ratio, knowing that if you dip underneath the 2-to-1 ratio, you've got to be right a whole lot of the time in order to make that type of trading style work long term. So keep those things in mind as you're going through your trades and looking for them. I really think that observing the market in the London session or possibly the New York session is going to be the way to go.